Hello, everyone. Welcome to our Charts of Fund session for the week of April 5th. This is Friday, the evening of April 5th. We're delighted to give you an update. Rohan Singh and Abhijit Chatterjee here, an update about the market. So we'll start off with an overview of the market, what happened this week. Then from there, talk about the sector comparisons. And then talk a little bit about QQQ. If you look at our Charts of Fund session, on our YouTube. We actually had a shorts recorded last week about a potential cup and handle on QQQ hourly chart. So we'll go over that, see how it panned out this week, and then talk about the near-term prediction on QQQ in terms of where the chart seems like it's headed. Then we're going to talk a little bit about Bitcoin. It's been having a crazy couple of months. There's a halving event coming up in a couple of weeks on the 19th of April. So we'll revisit the chart of Bitcoin. And then from there, look at precious metals. This was really the week of precious metals. Both silver and gold had an awesome week. And we'll just look at those charts, both for the metals themselves and the miners. So with that, let me just quickly point you folks to, this is the Charts of Fun YouTube site that you can subscribe to. We appreciate you subscribing and also hitting the like button if you like the videos. And then from our blogs, we do publish daily blogs. It's the Charts of Fun on substack.com. This week we talked about, starting off from April 1st, how high gold can climb. This was looking at the ascending triangle pattern in gold that I'm going to talk more about. Looking at GE, there was a big event. GE finally split up into 3 companies. They had actually done the healthcare spin-off earlier last year. And then this week, they spun off the GE's the aerospace and then the GE's energy business. This blog was about that. We talked about silver, which actually just had an equally strong week. Then Thursday, a very interesting event happened more with respect to 2 Fed chiefs. They're not voting members, but one from Chicago, the Goolsbee, and the other one, the Fed president from Minneapolis, Kashkari. They were a bit hawkish on the market, saying that perhaps they may not be a cut after all this year when the market is expecting 3 cuts. And in fact, Wednesday, Chair Powell talked about potentially still the 3 cuts happening. So it was quite a surprise to the market, and the market sold up on Thursday. And then finally, energy has been on a roll. This particular week had a geopolitical uncertainty and a geopolitical concern about Middle East tensions. There was a bombing of Iranian consulate in Syria by Israel, and there's hence significant concerns of instability in the energy market and perhaps kept the energy prices high. So with that, let's just go in to look at the comparisons of the market. If you look at what happened this week, starting off on 28th was last Friday. So these are the 5 days of the week, April 1st through April 5th. If you look at the top performing, so these are different ETFs. SLV for silver, GLD for gold, EM for the emerging market, UUP for the dollar, so UTF for the dollar, US dollar. QQQ has been known as the Nasdaq 100, SPY for S&P 500. Diamond is DIA, which is the Dow Jones Industrial Index. The IWM is for small caps. TLT is for the 20-year plus Treasury, long-term Treasury ETF. And then the proxy to the Bitcoin market is on the GBTC, which is a grayscale Bitcoin ETF. So if you look at what happened this week, right from the top of the, starting up from Monday, we saw that the silver market took off, and SLV actually outperformed the other instruments this week. It kind of closed at above 10%, a little over 10% for the week. So that was silver. The next was gold, which is in dark blue. It was close to 4.5%, 4.6%. And then flat line, pretty much unchanged, was, you notice, the emerging market at 0.41 and the dollar at minus 0.11. The rest of the markets were all kind of negative for the week. In particular, the worst performing was the Bitcoin ETF in this case. The grayscale Bitcoin ETF, GBTC, was almost down 5%. And then right after that was the Treasury, the TLT, Treasury ETF. And then right above them were basically the small cap and the Dow Jones. Interesting enough, this was a week where the S&P 500 and the QQQ were pretty much one on top of the other. If you look at the magenta and the purple colored lines, those are the two. QQQ ended minus 0.8, SPY ended minus 0.89, but they were pretty much following each other throughout the week, as you notice, one on top of the other, and ended right very close to each other. So that was the performance of the core ETFs. Now let's look at the sector performance. As you know, there are 11 sectors, but here we're looking at the 10 of the top ones. The other one that we've left out is the real estate, which usually is kind of goes in terms of a safe haven or more like a defensive play. But leaving the real estate out, we just looked at the other 10, and turns out that the top performing was energy. So there was geopolitical tension, as I mentioned at the beginning of the video, and that, especially with the Middle Eastern tension between Israel striking the Iranian consulate. So no wonder XLE was the strongest performing sector this week. It closed up close to 3.9%. Right below that was the communication sector. That's what the internet stocks correspond to. And every other sector. So there are 11 sectors, 2 of them were positive for the week. The remaining 9 were all negative. I don't show real estate here, but real estate also closed down close to 3% for the week. So the bottommost was healthcare. XLV is healthcare. That was just a little below 3%, 3.05. Right above that, in terms of the worst performing, was the discretionary XLY, 2.75% negative for the week. And then staples, XLP, was 2.66. If you can look at technology sector, XLK, that was a little less than 1%, minus 0.87%. The utility was about 0.75, and the industrial and the materials, basic materials, XLB, were kind of close to zero, minus 0.23 and minus 0.13. So that's the sector performance. So with that, now let's just go and look at what happened to the Nasdaq 100. So this is the chart that I had shared last Friday. I talked about in the hourly chart a potential cup and handle. From 448, it came to 432, went back up to 449. So that was the cup. Heavy volume, the right part of the cup forming, the right brim of the cup with heavy volume, we can notice. And also RSI and PPO were strong. So there was a possibility that if we had a bullish momentum this week, this handle that formed from 449 pulling back to 440, 442 could have caused a breakout. Well, we did kind of get an upwards move on when the market opened on April 1st, which is this Monday. It tried to break out above 447 and failed. And then from there, it came back down quite sharply the next day, all the way down to 438. Came back, made another attempt to take out 447, couldn't make it on Thursday, April 4th. And finally, this is when we saw a drop the afternoon of April 4th on very heavy volume. You can see the volume spike here. And that was primarily triggered by the 2 Fed presidents, both Goolsbee and Kashkari, basically saying that the market perhaps may not, or the Treasury perhaps may not have to do a rate cut at all this year. They were just kind of worried about inflation being a bit hot, and they just felt that there wasn't a need as such for any rate cuts this year. So that was a possibility that left on the table. The market didn't like it and kind of sold off with heavy volume. We did have a recovery today with the jobs data. The jobs data was actually quite strong for the month of March. We had almost over, market was expecting 212,000 jobs to be added. Market actually got over 300,000 jobs that were added, the non-farm payroll jobs. So the market did have a strong rally after the jobs, went up all the way to 443 on QQQ from a low of 435 yesterday. And then it pulled back towards the end of the day. But it's to be seen if this market will actually close down further next week or make another attempt to take out 443 and go back towards the 447 to 449 level. So what does the daily chart of QQQ tell us? So let's move on to the next chart and get a feel of what the daily chart of QQQ is telling us. So just like that. And coming here, we actually start seeing every candle here is a day of trading of QQQ, and we actually start seeing a dome-shaped top. If you take the tops of the last several months and join them, you can see a dome shape forming. What's interesting in here is the bearish part of it is the relative strength index, RSI, is forming lower highs. So that's a negative divergence. And the same thing with the PPO, which is also showing lower highs and in terms of a negative divergence. So when you start seeing a dome shape happening on the top, as you draw kind of a parabolic curve through the tops with the RSI and PPO weakening to lower highs, and more importantly, you can notice that QQQ is underperforming S&P 500, where the relative ratio of the QQQ to S&P-Y kind of peaked out in third week of January, and since then has been declining. So that also indicates the declining strength and momentum in the tech stocks. Also, QQQ in March had two very heavy distribution days with very strong volume. And the one that we got yesterday was also quite strong volume with a very bearish kind of a candle. When you have a red candle that engulfs over the last 3 days of the week, and it kind of, the range of the candle takes over the range of the previous 3 days, and also starts up at the top of the range of the day and ends at the lows of the day. When you have a fully shaded candle like that in a red candle, that's a bearish pattern. And that with a heavy volume actually is a bearish pattern moving forward. So something for us to look forward to. And it's possible that if you go back to the hourly chart and you start drawing a neckline through 435, you can draw a neckline through 435, kind of support there, and kind of have a 443 left shoulder from 435 to 443. Came back to 433 or 444 around that region, then back to 449 to form a head, back to 435, and now up to 443, the same level as the 443 here. So this could be the left shoulder, this could be the right shoulder, a break below 435 from a 449, that's about 14 points. So subtract almost 14 points from 435, that could take us to 421. So 420, 421 is a key support. So it's a possibility that if this turns out to be a head and shoulder breakdown next week, this could turn out that the market could go start heading towards 420. So it's something to be watched next week in terms of where QQQ ends. Now, looking at the crypto market, in particular Bitcoin. So here we're not looking at GBTC, the ETF, but we're actually looking at Bitcoin. You start seeing a flagpole. So from the 38.5, it had a very strong move to 73.8K. This is primarily the market getting excited about the halving event coming up. The halving event happens every 4 years. And what ends up happening is we're mining the Bitcoins, the amount of Bitcoins that get paid out for mining every block of coins gets halved. So now it's going to go half from April 19th. And so this flagpole followed with what we call as a pennant. If you start joining the tops and joining the bottoms, this is a flax or a pennant kind of a shape. This is often a bullish pattern because when you have a long flag, as in a long climb, and then a consolidation move with a pennant, that means that it continues in the direction of the primary move, which is higher. So there's a possibility that next week we should watch for this pennant to break out to the upside. If it does break out to the brown side, which pennants can shape up, then that could mean that we could perhaps go back to test that 49K again. But there's a good chance that if cryptos do break out higher, the next level from 73.8 would be towards 80 to 83K. That's the level that if you start joining the upper trend from 44, 49 all the way to 73, that trend keeps climbing, and that's about the 80 to 83 where that could climb to. Now, having talked about the crypto, the strongest instruments this week were precious metals. So let's look at gold, and gold is the GLD. That's the ETF that on a weekly chart shows a beautiful ascending triangle. An ascending triangle happens when you take the tops, draw a horizontal line through them. It's about the 193 level. And then you take the bottoms at 150 on October 22, then 168. And then, these bottoms are all higher bottoms as we climb. That ascending triangle with the breakout from 193 to 150 is $43. At 42 to 193, that gets us to 236. So that's the place where GLD as an ETF is headed. We can see strong RSI, we can see strong PPO, which are both climbing, good volume on the upward move. So we are at 215 is where we closed, and 236 is another, say, 21 points or so, which is a little about 10% more left in this rally. So that's a strong possibility that with the geopolitical uncertainty, safe haven gold buying happens, and this could have continued upward move for the next couple of weeks, a few weeks. The other interesting part is looking at the miners, the gold miners. And here we see a beautiful W-shaped double bottom, 25.2, 25.6 are the two bottoms. The W-shaped double bottom formed up over the last, say, 8 to 9 months. So 32.39 was the beginning of the W, came to 25, went to 32 again, came to 25, and then broke out. It broke out this week. This was a key week that the gold miners finally broke out on strong volume. So this breakout actually measures close to $40, 39.49. And the way you measure that is 25.21 to 32.35. That's about 7.14. At 7.14 to 32.35, that takes us to 39.49. So that's the target on the gold miners. And that's a decent upside from 33.8 to 39.4, talking about $6, which is a little less than 20% upside move. So 10% left on GLD, the ETF, but little about 18% or 18 to 20% left on the miners. So that's a pretty strong possibility. If you have to invest in the gold, precious metal sector, you may want to consider investing in the miners in terms of the upside potential versus the ETF, the gold bullion itself. In a similar way, the strongest move was actually not gold, it was actually silver. One in black is SLV. So let's look at SLV's chart, which is a weekly chart, a similar kind of ascending triangle. If you look at the tops, 24, 23.94. So that was the top horizontal line through it, and then the bottoms have been, or the lows have been climbing, 16.19, 18.38, 18.97, 20. So that's a rising trend of the lows. And so that's how an ascending triangle forms. The lows climb versus the tops are horizontal. The breakout happens. In this case, the breakout measures from 16.19 to 23.94. That's about 7.75. So at 7.75 to 23.94, that takes us to 31.69. That's the target on SLV, the ETF for silver. Had a very strong breakout this week. So these are weekly candles. A very strong breakout we can see on this candle, closing near 25, heavy volume. So from 25 to 31.69, you're still talking about another $6 to $6.6 of upside move, which is more than 20%. Talking about close to 21-20% move left in this particular ETF. And finally, the miners of the silver is called SIL. That's the Global X Silver's miners. And they're also a beautiful W-shaped double bottom is formed, 28, 22, back to 29, back to 22, and it broke out. Beautiful breakout above the 29 level, closed at 31, heavy volume. RSI is trending higher back up towards the 70 line. PPO is kind of breaking out above the 0 line in terms of climbing higher high. Lovely accumulation distribution, a very strong vertical climb in AD, indicating strong accumulation that comes from this heavy volume. And this overall, by the way, in terms of relative to S&P 500, it didn't do so well. It has been kind of lagging, but finally from late March, we can see that it's begun to climb higher, which means that it could perhaps outperform for the next few weeks as the market maybe pulls back and geopolitical uncertainty takes over safe haven buying. So across the board, GLD, GDX, SLV SIL, which is the silver miner, have a good potential for the next few weeks. With that, thank you. Good luck trading. We'll meet you again next week.